right now, let's go over right here to your web browser. You're going to type in ord-oracle, and we're going to get to the website. This is Ord Oracle. Every Tuesday and Thursday, we are joined by Tim Ord of the Ord Oracle. You check out his website, you get the newsletter, you get the book. It is fantastic. Additionally, you can go over to TFNN.com and check the services tab. We have the secret science of market tops and the 6 secret ratios that every trader should know. Strongly recommend checking out at least one of them. I think these have some fantastic kind of insights. Of course, we love having Tim Ord on. His analysis is just fantastic, right? So you get a little bit of an insight into how he looks at things through either of these newsletters. So, Tim, how are you doing?
How are you doing?
Doing okay. We're getting a little bit of we had a little bit of a bounce the past, let's say, Friday and Monday, at least in the SPY, and we're kind of back down a little bit. There's some decreasing volume, I guess.
Yeah. This is similar to December of 2018.
Okay.
And I kind of remember this pattern. But anyhow, let's start looking at the realities of what's going on here. The first chart is the American Association of Individual Investors Bull-Bear Ratio. This goes back to 2017. I mark the times when this ratio is down 0.4 or lower. We're at 0.32. Going back 2017, that happened 11 times, getting below 0.40, and there's one failure. So that statistic works out to be 91% chance that we're probably making an intermediate term low in this, or I'll put it this way, a multi-week low in this vicinity. So can the low be tested? We'll take a look at that. But anyhow, this kind of looks at the bigger picture. If you notice, all of these were bounces except for this one.
Yep.
But even with the 2022, I guess, bear market, this ratio worked out just fine. So anyhow, we're back down there again, and I expect the same thing to happen. There's a couple of reasons why. Actually, there's more reasons. There's more than one reason, but anyhow. And here's another reason. This is a weekly SPY. This is real easy to back check. You can go back for years, but every time it gets a close below the lower Bollinger Band, it's usually a low of a multi-week. And I kind of blew this up. You can see over here, we closed it below, the open closed below last week. And actually this week, I don't know, the week's not done yet, but we're actually, the open and close so far is below the lower Bollinger Band this week also.
Yep. So
that actually carries a little bit more weight. So we're making a low of some sort here. Can we test last week's low? That'd probably be the worst case scenario. But this, in my opinion, we're in a buy area right here, right now. And most cases, if you look what happened in the past, this was the only one didn't get back to the mid-Bollinger Band. But normally, at a minimum, you get back to the mid-Bollinger Band in most cases. Sometimes you go through them. And I'm thinking at least we get back to the mid-Bollinger Band, which is around 595 on the SPY. That's pretty much where I got long. I probably should have sold out. I kind of waited where I did or didn't. And so it's a judgment call. And so I'm staying long, but now we're probably looking at an intermediate term low. Best case scenario, we break to new highs. Worst case scenario, we'll probably get back to the mid-Bollinger Band.
Okay. So
not a big scare going on here. Well, there was a big scare, but that, in my opinion, we're at a minimum in a basing period. So that looks pretty good. This is, what did I do this for? Oh, kind of, you can see what better to look at it, I guess. We're here, and also we're at its previous high of support. This is around this 560 area. We're running into these tops back here. Kind of same thing happened last time we got down below the Bollinger Band. We're at some previous highs here. We bounced back down to it. We bounced off. We're kind of previous highs. So we're kind of working around here, building a bottom. Look, already. All right.
I know. All right, Tim, stay right there. I'll be right back. Welcome back, everybody. We're joined right now by Tim Ord of the Ord Oracle. Check out his website at ord-oracle.com. Tim, before we go on, we're closing on the weekly. That idea of a traversal back up to the mid-Bollinger Band, and you've been saying this for a little while where you need some volume moving up to that. So say, you get some, we traverse back to the mid-Bollinger Band on the weekly chart, and there's just no volume whatsoever. I mean, where do you see, or do you see anything yet of a certain price target to that downside?
Well, actually, we do. To me, what this is going on right here, right now, is probably a selling climax.
Yeah.
Kind of a similar over here. So the market's trying to push down, and to get two closes below the lower Bollinger Band 2 weeks in a row is pretty rare. I don't think it's probably going to happen. I think probably before the week's out, this market's going to rally back up, and we're just in a consolidation. But previous times when you bought below the Bollinger Band, it's a high probability trade. So I'm sticking with the trade that we're probably making a low. And again, worst case scenario is testing last week's low, which I don't think will happen, but it could. But here's the next. Here's a chart that to me is real important. There's different signs of strength. You have volume strength, you have advanced decline strength, you have McCollum Oscar, which is sort of advanced decline strength too, but this is kind of a shorter term one, gets you in to know in a fairly short period of time, which is basically the Zweig breast thrust indicator. And to trigger this well, actually, what it is, it's the NYSE advancing issues over the NYSE total issues. You take a 10-day average of it. When it gets down below 0.4, which we hit 0.4 on actually last Thursday, then it has to rally to 0.6 within 10 days, which is basically 2 weeks, 10 trading days, which comes out to be March 27th. And we're setting at 0.5 right now. And so if we get a trigger here again back up to 0.6, we had one here first part of January, and we'll have to bust through these previous lows to get that, probably 0.6. To me, we're back in a bull market.
Okay.
And will that happen? I'm not sure. But the next 2 weeks will kind of open my eyes what will happen. Either just it will be a dead cat bounce, in other words, a rally and a downtrend, or this will be a really bull market that we start breaking new highs again. So I think we got enough fear to be another bull market.
Okay.
But it has to show up with the sign of strength. So that's what I'm kind of waiting for here, if this will happen or not. If it doesn't happen, we'll probably get back to the mid-Bollinger Band or in that vicinity and probably turn right back down again.
Okay.
And if we do get to 0.6, we'll probably take out the highs. So I don't know which one's going to happen. So we'll have to wait and see. But to me, I'm actually still kind of leaning bullish because these signals off the weekly charts are usually multi-week rallies. If here you rallied a couple of months, here it looks like you rallied about a month, looks like about 4 weeks. So most cases, to rally that for a couple of 3-4 weeks, this would give time for this ZBT, I guess, to get back to 0.6. So time will tell. Right now I'm bullish just because the SPY is below the weekly Bollinger Band, and that's a high probability trade. So I'm sticking with it for right now.
Okay.
Let's look at the gold market here. There's quite a few things really kind of going on here that look actually really pretty good. And we talked about, this is HUY. I think we got enough time.
Oh, yeah.
Well, anyhow, we're talking about this ratio, the weekly HUY ratio staying below 0.12, and here we're actually at 0.12 now. So finally, this ratio is starting to go. How long will it go? It could go months, maybe even years. I don't know. But we're finally breaking out of the buy area. Last time we had a buy area was back in 2024, and that looks like it rallied about close to a year maybe. Then we had a consolidation, went back below into the buy area again. Now we're starting to break out to the buy area. And so this could have legs because this sideways pattern going back to 2020, really, that's all. This whole thing going back to 2013 is pretty much a sideways market.
Right.
I mean, you had rallies, but you didn't. Basically, it was a base building process for the last 12 years. We gone up, we come back down, we gone up, come back down. Even though we're making lower highs, the high, we're actually making higher lows, which was not much, but we're making higher lows. So it's kind of a bullish pattern. But I think we're going to start breaking out of this area. And we got a base of 13 years, which is significant. So what does that all mean? Well, on a short-term basis here, we talked about this chart. And I was thinking, I was telling you, I think it was Thursday or maybe last Tuesday, I think the market's going to get stronger rather than weaker, because to get through this neckline of this head and shoulders bottom, the market has to produce a sign of strength. A sign of strength is energy pushing through that neckline. And so that's the reason why I'm saying the market will probably energy are starting to pick up. And that appears what's going on here. The bottom window, you've seen this chart many times before. If you've been on this podcast or radio, it's a 50-day average of the up-down volume. And all it needs to do for an uptrend is stay above zero. And actually, back in January, we kind of got a bullish signal, got below 20, but finally got above zero, looks like, I don't know, January sometime probably. And now we're up plus about 17. And most of these trend following things, this market will just bounce in this range, around that 10 range, 20 at the most, maybe 5 at the least.
Uh-huh.
It'll trade sideways. And I'm thinking that's what's going to go happen all the way into July. So then from there, we may pull back to the neckline, don't know. I don't have no indicators yet on an intermittent term scale saying that we reached the upside. So this head and shoulders bottom, if you do the measurement, in other words, you take the head, which is, I forgot what it was, around 21, to the neckline, which is around 23. But anyhow, if you do the calculations, you come up with the target around 65 on this big head and shoulders pattern. So that's something that we'll have to watch for. But this market is probably going to get as strong, if not stronger, going forward.
Fantastic.
And yeah, here's we got 1 minute to go. You asked me, what to look for on stocks that are making significant lows. Well, this chart is a GOR. It's forgot the name of it, but it's GORO, and this is a monthly chart going back to 2015.
Yep.
And I put a Bollinger Band on it. And what needs to happen is get above the mid-Bollinger Band, and it has to have big volume doing it. And if you notice here, the Bollinger Bands are really pinching right here. This stock is really set up, especially with that much energy, in other words, coming in. And if you notice, we've got a big down day there. That's selling climax. And about a couple of months later, you got a big buying spree. They're called railroad tracks. And that's what happens at major lows. At max and selling, and turns around to be max and buying. That's what happens at major lows.
Gora. Well, Tim, thank you so much. Fantastic. Another fantastic analysis. Thank you.
All right.
We'll see you Thursday, Tim, okay?
See you Thursday.
Sounds fantastic, Tim. We'll see you then.
All right. Thanks a lot.
Folks, stay right there. We'll be right back.
Many trading newsletters attempt